When investors think about the future, they often focus on technology, artificial intelligence, electric vehicles, energy security, data centers. But behind each one of these trends lies something much more fundamental: raw materials. So today we're going to look at three strategic metals that sit at the center of some of the world's most important investment themes. We're going to be looking at copper, uranium, and rare earth elements. Now, each supports a different part of the modern economy. The question is, when have these markets historically offered the most attractive seasonal opportunities for investors? To answer that, we're going to compare the commodities themselves and some of the key companies associated with them. So, copper, uranium, and rare earth commodities aren't just resources, they've actually become strategic assets. Copper is essential for electrification and data center expansion. Uranium sits at the center of the growing debate around nuclear energy and energy security, and rare earth elements are increasingly important for advanced manufacturing, defense technology, and supply chain resilience. And together, they provide this useful lens through which to examine some of the world's most important long-term trends. So let's look at copper to start off with. Now, copper sits at some of the world's biggest investment themes, including electrification, data centers, power infrastructures, artificial intelligence. And this seasonal profile shows a market that's generally displayed a constructive long-term positive bias over the course of the year. And what stands out is that copper often experiences periods of consolidation and weakness during the middle part of the year. You can see here sort of from May to August, over the last 10 years, copper's had an average drop of 2.22%. And if we extend that out over to 25 years, you can see it's got an average of 0.32%. Now, there is a long-term structural demand issue for copper, is that demand's expected to increase and supply is very hard to suddenly turn on because it takes up to 10 years to plan and build a new copper mine. So a number of analysts are expecting long-term demand to push up copper prices over the next few years. And what sort of stands out to me here is you can see from about the end of August, early September through to the end of the year, look, copper's gained 90% of the time with an average return of 8.48%. So history does suggest that copper investors have done better by investing in the last part of the year. And there seems to be stronger periods of momentum in that final stage of the year. Now, if we just compare here using the compare function, let's have a look at Freeport-McMoRan. Now, this equity is a way that investors can get exposure to copper demand through an equity rather than a commodity. And you can see how the seasonal pattern is very, very similar. And so if we look at Freeport-McMoRan and we look at that same part of the year, look at how the equity performs. An average return, look, 19.53% at the final part of the year in Q4. So you can see comparing the two, comparing copper prices and this equity, it just helps us to identify whether seasonal trends are being driven primarily by copper demand or is it by broader equity market factors. And you can see here that Freeport-McMoRan does really tend to mirror the overall seasonal pattern of copper. Now, uranium tells us a different story. Unlike copper, this is closely linked to economic activity and industrial demand. Uranium is influenced heavily by energy policy, nuclear investment, and long-term supply considerations. And that creates an entirely different seasonal profile. And you can see that uranium shows a market that's historically moved through distinct phases during the year. One of the more interesting observations is that uranium's often displayed a relatively subdued performance through parts of early spring. So you can see here around end of March into early July, average return of 4.16% negative. Whereas from the start of August into the middle of September, that's really skewed by one particular data point. In fact, if we look at this here, yeah, very strong result in 2021, and that's probably skewing the data. Let's have a look. Okay, there does tend to be pockets of strength in the second half of the year, but it's some outsized gains. So that does tell you that the market is volatile and prone to large price spikes. Look, 20% fall in 2016, nearly, over 30% gain in 2010, nearly 40% gain in 2021. So that does help us see the volatility in the uranium market, but also notice that early spring period is definitely a weaker time of the year. And in fact, again, what we could do is we can use another equity as a way of expressing a uranium theme through a listed equity. So if we look at Cameco, you can see this, and let's compare that. You can see again, very similar seasonal pattern. Spring weakness, you can see here the yellow line for the equity expression of uranium theme, and the blue line is the uranium. See, it mirrors each other very, very closely. Now, if we look at rare earth materials, they're perhaps the least understood of the three strategic metal themes, yet they do play an increasingly important role in advanced manufacturing, defense systems, semiconductors, and supply chain security. Now, MP Materials Corporation, this gives us a way of expressing rare earth material plays through a listed equity. And compared with copper and uranium, we see a different kind of pattern. So if we just compare this with uranium, and copper, right, what you can see is that this market in the rare earth has historically moved in quite a different direction. So notice the second part of the year tends to be strong for uranium, tends to be strong for copper, but the rare earth materials has a negative profile. Now there's only 5 years of data here for this equity expression of rare earth, but it does show there's a difference here between all these different commodities that are being compared, and you can see at different times of the year they have different strengths and weaknesses. There is a broad consensus that this sort of spring into early summer tends to be negative for all of these materials. Average return, rare earth materials from sort of mid-April to the start of July, negative 9.57, for uranium negative 7.55, copper 7.04 negative. And then the second half of the year, say from the start of July into the end of December, tends to be positive for all of these rare earth materials, plus copper, plus uranium. So there is this historical seasonal bias towards these commodities gaining with more conviction in the second half of the year. So, the challenge for investors is deciding not only, which long-term theme they believe in, but also whether seasonality can help identify periods where opportunities have historically been more helpful. So, this copper gain, the end of the year, looks really quite attractive. So any deep dips in the summer look attractive for buying for copper. For uranium, you can see that there is actually a summer theme, but it is skewed by one particularly strong year. But definitely there's a period of weakness in the spring. And if you look at rare earths, You can see that rare earths is a bit of a choppier outlook, but that seems to be a sort of mid-May, early August bias, but that's skewed by the fact there's only 5 years of data. So I hope that helps to look at these different expressions of these very important strategic metals that are going to be increasingly at the forefront of governments and companies as they scrabble for dominance in the years to come.